Hey, what's up, guys? It is Thursday, June 3rd. I'm currently living on borrowed time. Got a friend coming over right now, but I had a observation light bulb moment, call it what you will, this morning, and I wanted to bring it up really quick, at least slightly. At least abruptly. No, I don't know which word I'm looking for, but essentially, I wanted to bring it up and kind of go over it. So let's get into it. I was looking at these moves in the morning on M2K, and to give you some background, one of the things that I've picked up recently is there's three triggers we have. We have the 20 level break, the bust pullback and break, and we have a volume bomb. So the bust pullback and break, works best when it's either below the 20 level, but it's not low momentum like this stuff right here. Like, this is nasty. Something with a little bit more oomph to it. And the 20 level break has to be obviously below the 20 level. So the reason I bring this up is because there will be times where you see here we have on the 30-minute chart RSI is still below that 20 level, which means we can't activate a 20 level trigger. The only way we can get back in on this trade is a bust pullback and break. At least that's what I was thinking before this morning, and I had picked this up a few days ago, thought nothing of it, and then I saw it again today, and it kind of clicked with me a little bit more. So why do I bring this up? Well, let's say this is a big move, and there's nothing here that would have given us a clear trigger on the 30-minute chart at least. And we're not going to go to the 5-minute chart because the 5-minute chart's for our entries. So I was looking over, and I kind of disregard the hourly and the 15-minute. Not for any particular reason. I just love the 30-minute and the 5-minute. That combo works for me really well. But when you look at the 15-minute chart, we know there's still momentum to the downside because we're well below the 20 level. So that's not a problem. We just don't have a trigger to get involved. However, when you go to the 15-minute, look what we have. Bust, pullback, break on the 15-minute. So within this candle, we're not just going to go based off the 15-minute. We still got down to the lower time frame. So let's go to the 5-minute, and what do we have? A 20 level momentum break trigger. So all this combined, we have momentum on the higher time frame, which is what we are looking for always. That's our bread and butter, is our momentum. Go down to the 15-minute, we have a trigger. Bust, pullback, and break. You go to the lower time frame for your entry. You look for your trigger. 20 level momentum break. That's your entry right here. So I'm going to say, to be safe, probably would have grabbed it on the break of these lows. That we are on M2K. Every pip is 50 cents. Within 10 minutes, 15 minutes, that was a 212 pip move. Let's just go through one 5-minute bar. That's a 51 pip move. That means you made 25 bucks a contract. That's 50% your money. To get involved, that's why I wanted to get involved on these, re-involved on these moves. But without a clear trigger, there was no way I was getting back in. So that's one example. I want to give you another one. Gold. So let's see. All right, another one right here. So obviously we had a trigger here, 20 level momentum break, because we're well below the 20 level, and then we broke above or below in this case because it's short. So that could have been a possible entry. Say you miss this and you see, well, the only way I can get back in on this trade now is either if it breaks this high, which is that's 54.5, this bust candle. So that's a very late, you'd kind of be missing the move at that point. Or if we pull back and then break, but it doesn't look like it's giving us that, right? And we obviously can't get the 20 level trigger momentum anymore because it already happened here. So let's flip over to the 15-minute chart. We know there's downward momentum, so that's good. That's what we're looking for. Again, that is our entire strategy, essentially, is that momentum. So let's go over to the 15-minute. What do we have here? Bust, pull back, and break. When we had it two separate times. So let's look at this one, this first one, at 4:45. What do you have here? Bust, pull back, and break. That's your trigger to enter. You get in here. There's your trade, 44 pips. Gold, every pip is a dollar move. You would have made $44. That's about 85% a contract, 85% your money. Say you missed that move. What do we get again? Bust, pull back, and break on the 15-minute. All while momentum is still increasing, which is in our favor. That's what we need. That's what we're looking for. So let's move it over again. We got another bust, pull back, and break. Let's look over the 5-minute now to get our entry trigger. And what do we have? 20 level trigger momentum right here on this candle. Grab it essentially at lows. What do you get? 62 pip move. With this option, if you're leaving runners, you potentially could have captured this move, this entire move. And I mean, this is talking, I don't want to talk hindsight, hindsight's 2020, but there's no reason you wouldn't have been able to grab this move. There's zero reason. MES, let's go through another example. Okay. Alright, so I think this is the example I wanted. Yeah, so there's an example up here, but really we had a trigger, so I don't want to use this as an example because you would have actually been able to enter off the 30, no problem. There was a clear signal to enter, and you would have been involved in this move. But over here, however, you can see we're a little late in the move, but we still have downward momentum, right? It's already above or below the 20, so we can't look for that 20 level trigger break. We can't look for a bust, pull back, and break because it'd be too high, too low, I guess, in this scenario. So let's move over to the 15-minute, shall we? Let's look over here. I don't think it marked it up. Sometimes the TradingView platform on desktop doesn't always work, but here we go. What do we have? Bust, pull back, break. Let's move over to the 5-minute. Now that we have our trigger on the 15, let's go to the 5. What do we have? 20 level trigger momentum. Let's say at just the very worst entry possible, you get in at these lows. First candle, 24 pip move. Every pip on MES is $1.25. That's 24 times $1.25. I believe that's somewhere in $20. So let's see. $30, yeah. This is a $30 move. It's essentially 65-70% your money. You hold it to the next candle over, $40 or 40 pips. And this is just a continuation move. You're not even getting in on the reversal. You're just grabbing trend. You're just trading trend, which is something that I don't think I mentioned enough. We're trading trend and momentum. Trend and momentum. Yeah, I think I could go through more examples. I think I'd rather you guys go back and do some back testing. Look at stock charts. Look at crypto. Do what you must. But I think I'm going to start looking for this more because I've noticed there's been some moves I haven't been able to capture. However, if I just looked at the 15-minute chart, I would have been able to get involved on these moves. So yeah, guys, Really cool stuff. Hopefully it opens up some eyes, gives you guys some ideas. Look at the higher time frames. I bet you could do the same thing moving from the hourly to the 15, and then looking at the 5. Basically moving up a time frame if you want to do higher swing trades. But yeah. Alright, I hope you guys had a good day. I will catch you on the next one. Later, guys.